Welcome to our daily Forex market analysis, and this is for trading on October the 29th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. All right, so let's take a look at what we're looking at. We had Bank of Canada today. Bank of Canada said that they're going to keep the rates low till 2023, I believe. They did mention negative rate, but they said they're not actively looking at it at this point. They're not discussing it, but definitely they're looking at keeping the interest rates low. So they're in no rush to raise them. So that was negative for Canadian dollar. And then, excuse me, we have coming up, we have Bank of Japan here. So same thing here. If we see concern in regards to the economy now, or a surge in virus cases, that will be negative. That will be bad for Japanese yen. Right now, Japanese yen has done well over the last few days here because of the markets dropping, the stock market's dropping. So when stock markets drop, yen does well, yen goes up. So, but this here could be concerning. So we'll need to keep an eye on that. Also coming up here on Thursday, we have another central bank. We have ECB. So again, very important. So right now, what we are seeing in Europe is an increase in virus cases. And today we heard from Germany. Basically, Germany is going into lockdown, and France as well going into lockdown. Italy and Spain are already seeing a lot of virus cases as well. So overall, it is concerning. And this is why the markets are dropping, because of this recent surge in virus cases. Basically around the world. China has seen more cases, US has seen more cases, Canada has seen more cases. So with the winter months coming here, the rise in cases is actually quite problematic here, and it's causing concerns in the markets. And then also the biggest issue is the lockdowns. So if the businesses are going back into lockdowns, that will have a negative impact on the economy, and that is going to be bad basically all around for the stock market, and creating risk in the market right now. Another thing, we are almost into the election here next week. In the terms of U.S. elections, now so basically the hopes for the stimulus package have been squashed. So that's off the market. That's another thing that is causing concern. And right now, with the elections coming up, that is also adding to the negative sentiment in the markets. And this is why we have seen the stock market drop as a result of that. So money is flowing into cash. So US dollar is doing well because of that. So let's go onto the charts here. Other than that, the most important thing here would be basically Bank of Japan, ECB here. If they express concerns, well, they will. So this is where we have to be cautious here. If they talk about more stimulus, express concerns about the lockdowns coming in different countries in Europe, all of that talk can be negative for the euro. So we'll watch out for that tomorrow. We also have GDP numbers here. Now, GDP numbers are likely to go up, but that's because the economy had opened. So, excuse me, there was a big deficit, and now we are back to the markets opening. That's why it was good for this previous quarter. But with the surge in virus cases here, we could see more problems. So we'll have to watch out for that here. So this number, even though it looks good, it shouldn't really have that big a positive impact on the stock market. All right, so let's go on to our charts here. We'll start off with euro dollar. Euro yesterday, we were looking for a drop here. We got that. So bias here is still bearish here. Now we may get a bit of a pullback into 1.17 70 level, and then looking for a drop move, looking for a move back into this 1.1685 level. So that would be the first target, and second target here would be 1.1600 level. So bearish bias here for euro dollar. Pound here, pound as well. We did see a drop in pound. Now, there were some positive comments in regards to Brexit here. There were comments that came out, said that they're making progress in regards to Brexit talks, and they may actually be able to reach an agreement in early November, so next week, and that pushed pound up. So it did bounce off of the support level here. So we do have bearishness still, and the bearishness, again, not so much to do with the pound at this point, but overall sentiment in the market. So bias is still bearish here. So if the stock markets continue to drop, we are likely to see, especially in the US stock markets are dropping, we are likely to see that flow of money into the US dollar. So that may cause the other currencies to go down because US dollar will be going up. So bearish bias still here, targeting this 1.2870 level here for pound. So this is bearish as well. Now we do have to keep an eye out for all the Brexit related stuff. So any positive comments are likely to push pound higher. But for now, overall, because of US dollar strength, this is still bearish. Aussie dollar here, big drop yesterday. We were looking for this to drop. It tested right into where we had looked at, and now we have a big bearish engulfing candle. We may get a bit of a pullback here, and then looking for a drop again. First target, again, 0.70, and then second target would be back into the support level here, 0.6920, so bearish bias here. So with the stock market dropping, Australian dollar and New Zealand dollar both will tend to drop. So if we continue to see a drop in the stock markets, these two currencies are likely to go with it as well. New Zealand dollar, same thing here. We saw price retest the high and then a nice bearish engulfing candle. So I will look for a bit of a pullback here and then looking for a drop back into the support level, into the bottom of the range here. 0.6550 is the target. So bearish bias for New Zealand dollar as well. Dollar CAD here, big jump like we had talked about yesterday. So with this one here, one reason why dollar CAD went up was because of the US dollar strength. But the main reason here for a big move to the upside here was because of Bank of Canada expressing concerns about the economies, saying that they're likely to keep the interest rates low for a long period of time, all the way into 2023. That is incredible. So when we have expansionary monetary policy like that, it is negative for the currency. So good for the economy, but negative for the currency. So in this case, this is why we saw Canadian dollar drop. So dollar CAD went up as a result. Now it is into resistance, so be mindful of that, which means we may see a pullback here. But once we see price go through, looking for next target into 1.3420. So bullish bias here for dollar CAD. Now another thing to keep in mind here is as we get into US elections, expect volatility in terms of US dollars as well as the stock market. So before there was all this positive sentiment in regards to the stimulus being passed, and now that we are beyond that, there's no way that stimulus package will get passed prior to elections. There's just absolutely no hope at this point because we're just so close to the elections. Because of that, we are seeing that drop in the market. And the problem is once we are past the elections, so it depends on what happens. Maybe we'll do another, I will do a recording on what to expect for the elections. So maybe we'll keep it there. But basically the problems will be there'll be trouble passing the stimulus package like we have right now, regardless of who wins. So, and that's why the stock market is not liking it so much. And we are seeing that drop, but expect volatility both in the US dollar as well as the stock markets in the US in the coming days here. Let's take a look at our commodities, starting off with silver here. Silver looking bearish. We finally see a drop through the support level here. And this is looking bearish still. 22.80 is the first target here. And then we have 22.37. So bearish bias, or let's say 22.20. So bearish bias here for silver. Gold as well, big drop in gold. With the stock market dropping, we are seeing a drop in commodities as well here. So this is looking bearish. It is into support, so be mindful, but still looking bearish here. 1848 is the first target. And then we're looking at 1818 back into this area here. So bearish bias for gold as well. Oil here, not doing so well. Bearish bias. Again, it's close to support, so watch out, but bearish. And the reason for oil to drop here is because with the economies going back into lockdown and shutting down, that is not good for oil. So oil tends to drop under those conditions. So this is bearish here. Now watch out for pullback potentially into 38. Or even 38.20, and then looking for a drop here as well. So bias here is bearish for oil as well. First target 36.75 and then 35.70. Copper also looking bearish. Now it's right into the support, but still maintaining that bearish bias. Next target is 2.98, and beyond that, we're looking at 2.95, so bearish bias here for copper. Bitcoin here, Bitcoin did drop. We had talked about this resistance. This was a major resistance from back in May of 2019 here. We are right into that, so that's a double top type of scenario here. We generally do tend to see reaction into those major support resistance levels. So this one is neutral to bearish here, or not overly bearish at this point. So we have been getting some positive news about Bitcoin. It seems like I think there's hedge funds going into it. There's big banks going into it. JP Morgan has made a big bet on Bitcoin as well. PayPal is going into it. Facebook is already into it. Russia was talking about digital currency. So all in all, a lot of positive news lately in terms of cryptos here, especially Bitcoin. So all of this is positive, but we have seen some selling here. So what I would look for here is a potential pullback here. And then we may see a drop, 12,600. So bearish bias here for Bitcoin. Next one, S&P 500, a big drop here. Market's not doing so well. Part of it is dashed hopes of the stimulus. And then secondly, we also have the election uncertainty. So volatility created due to that. So still looking bearish here. Potential pullback into 3,300 level. And then looking at 3,200. So bearish bias for S&P 500. Nasdaq here, same thing. Looking bearish. I will look for a potential pullback into 11,365 and then looking for a drop 11,000, so 10,930 essentially is the target. So bearish bias here for Nasdaq. Dow Jones as well is right into the support. Watch out for a bit of a pullback here into 26,800, 790 or 800. And then looking for a further drop here. Next target is 26,000, so bearish bias. DAX here, a big drop for DAX. We are right through the support levels here, right past our main big level here. So this is looking bearish as well. Next target here is 11,400. So DAX is bearish as well. And then we have FTSE. FTSE also looking bearish here. Right through the major support levels. Next target is 5,500. And if it continues, we are looking at 5,450. And last but not least, we have Nikkei. Nikkei finally out of that very, very narrow range that it was trading over here. So this is the first major drop. So this is looking bearish as well. And we are looking for a further drop here. So in terms of targets, first target here will be 22,800. So all in all, a lot of volatility in the markets right now, looking bearish. So that's it for today, and I will be back again tomorrow. Bye for now.